If you want to learn how to trade like the big banks and be on the right side of the market with them, give me about 8 to 10 minutes of your time and I'm going to show you exactly how to start trading with the big banks, identifying where their orders are and what to look for when price trades to these large orders. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Okay, so I'm sure most of you are asking, how do we identify where the big banks are trading in the market? And we'll be able to identify where their orders are at by using a simple strategy known as supply and demand. Now, when it comes to identifying supply and demand levels, there are two things that you want to look for. So first, we are going to talk about supply zones. First, we need to identify a small green candle, something like this. Once we identify that small green candle, the next candle we want to see is a very large and aggressive red candle to the downside. So something like this. Typically, if you go onto a chart and just look for a very large red candle to the downside, look one candle to the left, and if you see a green candle, that is going to be your supply zone. So now to mark your supply zone, what you are going to do is you are going to take this from wick to wick and project it to the right. Now, this is where the big banks are going to have their orders waiting to get filled. Now, I want you guys to imagine this. Say there is a very large fund. Let's just say it's JP Morgan, and they're trying to go short 100,000 ES. Well, if price makes a very quick and aggressive move away from their short orders, they are not going to chase with that amount of size to the downside. So what they are likely going to wait and do is wait for price to come back up into those sell orders, wait for all of them to get filled, and then more than likely we will see that reaction to the downside. So we want to be the ones trading with the banks. We want to wait for price to come back up into that supply zone, wait for their orders to start to get filled, and take advantage of that by following where the big money is. And I'm going to talk about how we can identify where our entries are at. But again, when we are looking for supply, we want a small green candle before a very large aggressive move down. Mark your supply zone from wick to wick. Sometimes the red candle could have a wick that goes higher than the previous green candle's wick. If that's the case, you're just going to mark it like this. But then from there, you want to wait for price to trade back up into that supply zone where the large orders are waiting to get filled. Wait for the reaction, which again we'll talk about, and look to get short to catch the next move down. Now, when it comes to identifying a demand zone, what we want to do is we want to look for a small red candle, something kind of like this. Now, the very next candle, what we want to see is a very large green candle to the upside. So again, the way that we're going to be able to identify this is looking for a very large green candle, look one candle to the left and see if it is a small red candle. So right here is a very good example. We have a smaller red candle before a very strong aggressive move to the upside. As a result, leaving unfilled buy orders down in this area. And we want to look for price to come back down, test it, make it support, and look for that next leg up. So again, imagine you are a very large fund, say JP Morgan, and you're looking to get filled on 100,000 ES long contracts. Well, if price makes a very quick and aggressive move away from where you're looking to get filled, these banks are not going to chase the move to the upside. They're going to wait for price to come back down to where their limit order is, get filled, and then look for that next move up. So now when we are plotting our demand zones, we are going to take the lowest wick to the highest wick on that red candle. Say we had a little tiny wick right here. We are going to mark from this bottom wick to this upper wick and then project it to the right. If this green candle's wick is lower than the red candle's wick, we are simply going to draw it from the green candle's wick, the lowest point, to this upper wick right here on the red candle. Now again, this is going to be our demand zone. This is an area of support. So the next time that price trades down into this demand zone, we are going to look for these orders to get filled, look for confirmation to get long, to then catch the next leg up. Now, the reason why supply and demand works, again, there are very large orders waiting to get filled at this area. Retail is not moving the market. It's the big banks that are going to be moving it. So your 2 or 3 ES contracts are not going to move price down, or your 2 to 3 contracts are not going to move price up. It's these very large orders, 10,000, 50,000, 100,000, etc., that is going to move the market. And more than likely, That's going to be the banks that are sitting in this area. So let's just go ahead, let's go into the chart and let's plot some areas of supply and demand. That way it helps you guys identify these levels in the future. So looking right here, we have a very large aggressive move down. Look, one candle to the left, we have a green candle right there. This classifies as a supply zone. Looking right here, again on the 4-hour time frame, very large aggressive move down. Look, one candle to the left, we have a small green candle. Guess what? That is going to be your supply zone. Looking right here, we have a very large aggressive move to the upside. Look, one candle to the left, it's a red candle. Guess what? This is your demand zone. So you're going to mark it from that wick to this red candle's wick, and then you're going to project it to the right. As you can see, we hit it and actually had a very quick aggressive move from around 54.90 all the way up into 55.26, which is, what is that? 36 points to the upside. You guys can do the math on that. 36 points is a lot on ES. Same thing here, green candle, very large aggressive move up. Look, one candle to the left, we have a small red candle. What are we going to do? We are going to plot it from this lower wick to this upper wick right here and project it to the right, and that is now an area of demand. Looking to the left right here, very large aggressive move down. Look, one candle to the left, small green candle. Guess what? This is going to be your supply zone, so you'll mark it from this upper red candle's wick to this green candle's lower wick right there, and that is your supply zone. One more example right here, very large aggressive move to the downside. Look, one candle to the left, small green candle. Guess what? This is your supply zone. Take it from wick to wick and project it to the right. So those are a few examples on how to draw these supply and demand zones. Now, as far as time frames, honestly, the higher the time frame, the better. But the way that I go about this is I usually start on the monthly time frame. And I mean, if we're looking at ES right now, the only monthly demand we have is way down here. So it's not even like relevant to where current price is. After the monthly, I'll break it down to a weekly. We actually just bounced off of a weekly demand just the other day. So as we can see, we have our small red candle, very large aggressive move up, making this a weekly demand zone. And typically when you're watching these levels, the best area to watch for your entries is one, going to be the very beginning of the wick, but then second is going to be the very beginning of the body. So you can see that we came right down to the very beginning of that red candle's body. That was the exact bottom before we rallied back into all-time highs. So after I'm done marking levels on the weekly, I'll then break it down to the daily. And honestly, right now, we don't really have any daily supply or demand levels. So nothing there. If we go down to the 4-hour, we had a few that we ended up bouncing out of. Again, we had this one right here. We had another smaller one right there. But other than that, I mean, no supply. After the 4-hour, I'll then break it down to a 2-hour and start looking for any supply or demand zones, which doesn't look like we actually have any. And then after the 2-hour, I'll then break it down to the 1-hour. Now, I will say NQ does have a zone that we could potentially watch here in the near future, which actually ends up being a 4-hour supply zone. I don't know why it's not showing on here, so I'll show you guys sink or swim. So looking at NQ on the 4-hour time frame, we have our small green candle right here, large aggressive move down. This, as a result, is a supply zone, and this is actually a trade that I ended up taking. Price came up, tested it, rejected it. I got short. Caught a nice move down. So again, I will mark these levels monthly, weekly, daily, 4-hour, 2-hour, 1-hour. Just remember, the higher the time frame, the more important it is. And again, these are where the big banks are having their orders sit in the market. Now, another thing that you can do, and I highly, highly suggest using this. If you guys don't know how to use Bookmap, I have tons of videos on my channel showing you guys on how to use it. And if you guys actually do want to check out Bookmap, I will be leaving my affiliate link down in the description. But pretty much what Bookmap is doing is it's showing us exactly where buy and sell orders are sitting in the market. So if we look at the exact bottom today on ES, we can see that we actually had a lot of buy orders sitting down at the bottom. And these orders were sitting there for quite a bit of time. So now how can this be helpful when trading supply and demand? Well, let's just say that price is coming down to a demand zone. Well, what is inside these supply and demand areas? Large orders waiting to get filled, large passive orders being limit orders. So if price were to come down to a demand area and we use Bookmap to visually see where the buyers and sellers are sitting in the market, well, if ES is coming down to a demand and we start to notice, hey, there's a lot of buy orders sitting down at this area, that confirms that that demand zone is truly valid. And same thing for supply. If we were to come up into a supply zone, say we had a very large area of sell orders, Well, that's confirming that that supply zone is valid and that there are large orders waiting to get filled and they are looking for a move to the downside. So piecing together visual orders via Bookmap plus the areas of supply and demand, in my opinion, this always sets up for a very high probability trade. Now, the very last thing that we need to look for is for confirming price action. So typically what I do when price trades to these areas of supply and demand is break it down to typically a 5-minute or a 2-minute. Now, sometimes it will confirm on a higher time frame, 15-minute, 30-minute, hour, 4-hour daily, but most of the time my trades are going to come from a 5-minute or a 2-minute time frame. So again, going back to that NQ trade, I know I've talked about this trade in the last few videos, but this is just a really, really good example. Again, typically we are watching the very beginning of the zone, so the very beginning of the wick, and then the very beginning of the body. Price trades up into that 4-hour supply zone. At the same time, there was large sell orders sitting on there, and I could visually see it via Bookmap right at this 21268 level. So because we had that 4-hour supply zone, price traded up into it, I could visually see that the banks had their orders sitting at this level waiting to get short. The only thing we needed from there was confirming price action. And typically what I'm looking for in price action when we come up to a supply area is a bearish candlestick. Greystone doji, long upper wicks, bearish engulfing candles, any bearish candles right off the level. And typically an elevation in volume makes it so much better. So now if you piece everything together, we had a supply zone, large orders are waiting to get filled in that area, can visually see it through Bookmap that there are large orders sitting there, confirmation in the price action and confirmation in the volume, that sets up for a high probability trade. Now the candle that confirms your entry, your stop loss is always right on the opposite side. So I was literally risking 8 points on this trade on NQ, which is literally nothing. This was my stop loss on this trade, which is very, very small. And then I caught this move to the downside. And then vice versa goes if you are trading a demand zone. Say we go back to that ES example. Again, this is our weekly demand. Break it down to, let's just go to a 5-minute time frame. As price trades down into the beginning of that demand zone, we want to look for the confirmation. Say we trade down into the level, we use Bookmap and we see visually that there's very large buy orders waiting to get filled. Plus on top of that, we got a very bullish candle right here with a nice long lower wick. And then what happened once we hit the level, we start to get an elevation in volume on this candle and especially on this candle, which confirms that this level is valid and you should be looking for a long. So again, piecing everything together, weekly demand, price visually has buyers. You can visually see that there are buyers via Bookmap, confirmation in the price action, confirmation in the volume, sets up for a high probability trade to the upside with a stop loss set right below the low of this confirmation candle right here. As you can see from that area, which was around like 58, 57, ES has now rallied all the way back up towards a high of 6,046. But that is going to wrap up this video on how to trade like the big banks. Again, what we want to identify is an area of supply and demand. Use Bookmap to confirm that that level is truly valid, and then watch the price action and volume to confirm to take the trade. So if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.